Good afternoon, everybody. Jerry and I were
Welcome
just
back.
talking about this gold tariff that customers are already informed about. Look at us, our customers are so well informed. I love it. But what does it mean? X is on fire. So we thought, hey, you know what? Let's jump on. Let's do a screen share. Let's find out what's going on in real time and make our comments. So, Jerry, you wanted to show your screen first, right?
Yeah, let's do that.
All right, so I'll
So
make
I'm
you.
gonna I'm gonna first bring up Vince Lancy. Obviously, everyone should know by now who Vince Lancy is in the Vince Lancy report, and you can follow him at VBL Goal Fix on his Substack. Can you see it there?
I do see it, and
All right.
this is
So,
paid. So you're
uh,
showing paid work, so everyone
yeah,
should go get their own subscription so
or
that
we'll
they
just share
can.
the knowledge as we like to, so all of our customers are in the know.
Sure, sure.
So basically, the United States, the CPB, the Border Patrol, placed tariffs on imports of 1 kilo bars and 100-ounce gold bars. And just so you know, this is what the kilo bar looks like. I obviously don't we don't sell the 100-ounce gold bar yet, but it reversed prior exemptions and potentially disrupting the global bullion flows. Bloomberg reported, citing the Financial Times. GoldFix is also a paid member. So this is obviously leading to a lot of risk. And in the report, what are the risks? UBS strategist Joni Tevez described the development as one that could destabilize the role of the US futures in global gold pricing. Until there's clarity, we expect the gold market and precious metals markets to more generally remain very nervous. On the back of this news, gold futures spiked to 35, 34, the futures market, triggering a historic gold market dislocation. What does that mean? Take a look here at that photo. This basically shows there is a huge divergence between the futures market and the price. And I think this is very much in line, with the golden age and making America great. I think, Jeremy, they want to be the best in crypto, so they're going to make crypto the capital. How can you be the best in gold if you're going to let the gold market leave the United States? And we're seeing price arbitrage metals flowing out of the US into the Shanghai market for arbitrage. When you have a dislocation like that, you can buy low here where the spot price is dirt cheap and sell higher there in China, or sell silver in India much, much higher. It's a great business plan, a good opportunity to make profit. But the metals are flowing from west to east. This will inevitably cause huge problems for the COMEX. The COMEX cannot keep up. They're going to lose the influence of the price. Would Trump allow that? Would Trump allow the US dollar, number one, to die? And not back its currency with gold? And number two, would the US lose the pricing hegemony, pricing control? Would they do that in a golden age? You cannot have a golden age without gold and being the kings of the gold market. So we're seeing this divergence, and this is why the Swiss government, the cabinet, the very day that the tariffs were going to be implemented, August 7th, today being the day after, August 8th, they hosted an emergency session in Switzerland. And in this session, they are offering to, instead of combating like our Canadian government wants to go toe to toe and elbows up, Switzerland did not want to retaliate. They came to the table and they're counter offering to move Swiss gold smelters to the US. These beautiful kilo bars,
Well, those look
back
like
to the US. Those are
are
not
those
the
100 or
100 ounce.
200?
No, that was the
I think those are 200.
yeah, but those beautiful Pamp Swiss bars being melted and smelted and made in the US, that would be phenomenal, Jeremy. This is where I see it. I mean, this is something that we have to keep an eye on. And further, just to share a little bit more, this just came out from the Wall Street Journal. President Trump will soon issue an executive order clarifying which tariffs apply to import of gold bars. So it's not certain yet. The executive order can make the changes from 100-ounce gold bars, from kilo bars. We will wait and see as the world is on the edge. All the world is leading back to the gold market. And one person who actually posted this plan was Willem Middelkoop, and Willem, he was the one who first coined Bitcoin to become the virtual gold. It's very interesting where the relevant one right now we're talking about is physical gold and not virtual gold. People don't want the virtual, people want the physical, right, Jeremy?
Yeah, so for sure. Jerry, I'm gonna jump in. I want to show our X feed
Yeah,
because
I'm gonna stop sharing.
yeah, because
Yeah, right on.
I grabbed some interesting posts that I thought would be good to look at because they just inform what's going on. Just a moment here. You can see my screen. Did I share?
Not
Oh,
yet.
okay. There we go. All right, you can see this, right?
Yeah.
Okay, great. So just running through a couple of things I've bookmarked, we can kind of go through them together, right? So Wall Street Gold, they said gold just got weaponized, the 39% tariff. Shipments halted, premiums are spiking, the short positions are sweating because they don't have the promise of physical product potentially.
Yeah.
Um, this isn't about, oh, look at this classic ChatGPT stuff. This isn't about revenue, it's geopolitical chess. Um, so I do like this idea of the tightening of control. I'm not sure where this all heads. Before we jump into this one, so this was very interesting. Hansa Cherny, USB just dropped a warning. US tariffs on gold bars could spark serious funding stress in global bullion markets. Let's unpack what's happening and why this might also shake the silver market. So already you have UBS starting warnings about this. So they're saying the US slapped the tariffs, the same bars used in wholesale for exchange for physical, a swap between futures and physical market and vice versa. Traders often run short EFP positions, sell future contracts, commit to delivering the physical gold later, often in London, but now tariffs make that delivery into the US more expensive. So many traders might unwind the EFP short instead. Unwinding the short exchange for physical means you're going to buy back the futures or cancel or reverse the physical gold delivery. But here's the kicker, the physical leg is usually financed. Closing out triggers a sudden demand for cash in the London gold market. UBS warns this could cause a liquidity crunch, especially in London, the global hub for physical gold. Higher costs, massive closeouts, funding stress, tighter credit conditions. But what about silver? What do you make of this so far, Jerry? You following?
Yeah, that was the article from the from investinglive.com that explains that whole mechanism, the EFP mechanism. And this brings up, the ratio, how many contracts for every 1 ounce available. And we're right now talking about the largest market in the world, which is a $23.5 trillion market. We're talking about the massive gold market. It's number one market cap in the globe. It's the most important, right? And to know that there's over about 100 paper contracts for every 1 ounce of gold, this is huge. Talk about silver, it's number 7 on the market cap globally, so it's a very large market, but with structural deficits, going towards 6 years of straight structural deficits, growing demand. Um, this is even worse because there's about 400 paper contracts, and when the margins start to rise, the margin requirements, capital requirements start to rise. Borrowing is already shot from the banks. No one's lending. There is a standstill, and the comics could be rendered, and this could be the fail to deliver moment.
Yeah.
And
Let's
the default is underway. I think it can happen really quick.
Well, let's keep going with this scenario. So they're saying silver is often treated as gold's shadow. It trades in the same EFP system. If gold's physical delivery becomes volatile, silver may become a hedging substitute or a liquidity refuge. And this creates two silver scenarios. The first is silver gets bid up. If traders rotate from gold to silver,
Hmm.
if EFP shifts towards silver for easier delivery because there's no tariffs on it, if physical demand jumps due to the fear of gold dislocation. It's very interesting how connected they are when there's stress in the system.
Yeah.
Or scenario two, there's a silver squeeze. Many short positions exist in silver more than gold. This is just as you said, Jerry. And if the EFP mechanism strains, fewer delivery options. If silver becomes the easier metal, demand surges and the shorts get cornered fast.
Yeah.
So UF tariffs on gold equals unexpected wild card, could strain funding markets, may cause ripple effect into silver. 1 kilo of gold just got political. 1 ounce of silver just might get explosive. That's pretty interesting. That's very interesting. And then um this guy he followed it up very quickly with this post about the LBMA being in trouble.
Yeah.
Want to take a look?
Yeah. Let's do it.
Let's take a look. Is the LBMA in trouble? The US is now shorting the gold supply chain. Instead of London, Switzerland, New York, the goal is to bring it all home, lower cost, more control, another nail in London's coffin. So if you're a follower of what's his name? Tom Luongo,
Yeah.
this is right up your alley.
Oh yeah.
Gold destined for COMEX typically flows through London and Switzerland and then delivery to New York. This setup made sense decades ago. Today, it's overly complex. I'm not quite sure how I'm not quite following this yet because obviously this is getting disrupted.
Yeah.
China runs a tight, efficient system. They use the Shanghai Gold Exchange spot, Shanghai Futures Exchange, both in the same country, with a direct connection of refiners and banks. Yes. But in the West, we have these cross countries using it. And the
Hmm.
US just said, nope. The 39% tariff on Swiss gold bars means higher cost for COMEX delivery, incentive for domestic refining. So maybe what you said earlier that the Swiss are saying, hey, we'll give you refining capacity. Maybe that's still in the works.
Yeah. Well, countries have been scrambling, with the tariff, the onset of the tariffs, you know, from Emancipation Day, to secure their economic futures. And these are companies, even countries, major industries. This is Switzerland we're talking about here, and their gold market getting slapped with a 39% tariff had them, conduct an emergency meeting
Yeah.
where companies are skirting, they're going around, and they're setting up shop in the country who is launching the tariffs. We've seen this with Toyota, how many other companies? They just set up shop in the US. So the offer to bring the PAMP smelters into the US is huge. And maybe in a few hours, when Trump announces this executive order clarifying which tariffs apply, does that mean he accepts? Will PAMP Swiss be made in the US? We'll see. This definitely rearranges the order. If you just scroll up a little bit on your screen there, you had the order with the flags with LBMA to Switzerland. This order will be changed because the LBMA and the COMEX prices, in my opinion, have lost its relevancy. China wants higher prices. They're using domestic prices.
Man,
India,
they should just be, sorry to interrupt you, they should just be mining that gold in Canada, shipping it down to the US, refining it here and there, and like it could be so much easier than trying
but
to ship it by boat or fly it over
but
and
that
all
would be
that
that
stuff.
would be the solution, Jeremy. Canada does not want solutions. Solutions will disrupt the strategy, the Cloward Piven strategy of ushering in the welfare state. Let's keep our industries down. You mentioned before we started recording, we're below New Zealand in terms of our economic output. In the 80s, you mentioned we were number one in silver output. In the 80s, we're still number four in oil.
70s,
We're
early
still
70s.
number four in gold. There's no reason why we're not wealthy here in Canada.
Yeah. So let's go on because this is very interesting because you'd wonder Why would we'll get the clarity. This isn't all set in stone. Maybe it's part of a plan for negotiation, and you got to embrace the chaos. But this move disrupts the logistics and the LBMA's grip on the Western gold market. I
Yeah.
think that's interesting because on the one hand, you think, well, why would the U.S. want to disrupt their own grip on the Western gold market unless it's other interests that have control over it, and you're trying to release that so that it's more equitable and democratic
I
across
have
the world.
I have
That,
a I
that
have a
that's my
thought on that.
that's my take. Yeah, go ahead.
Well, I have a thought on that. And we're talking about this idea of President Trump's golden age and making America great again, and the idea of reducing the output of war, slowing down the war machine. They were talking about reducing the the military's budget, reducing it almost by 50% gradually within the next 6 to 8 years, I believe. So the comics has been used to keep the price down, London's price down. Why? So that it's cheaper for the military to access cheap silver and gold that they need.
Yeah,
Microplating, radars. The biggest user of especially silver is the military. So maybe if we can reduce the militaries and their conquests appetite for war and sucking up all the metals, if we could somehow reuse the metals for better things, like backing the currency in our coinage in the US.
interesting. Let's keep going here. Why does this hurt the LBMA? They're losing volume, they lose the role in price discovery, they lose authority, they lose trust as a global gold steward. While the world shortens supply chains, London remains a costly middleman. So I think that's really interesting, just kind of really hurting London more than anything, right? This is what happened earlier in the year when they were taking delivery. The US just made its first real move, the shift both physical and paper gold pricing in the Western Hemisphere. LBMA is on the wrong side of history. Gold is shifting not just in price, but in where its value is set and who physically controls it. London is losing ground and the West is rewriting the rules. I think it's interesting just to think about the bricks in the background and how they're creating um, exchanges all over the world.
Yeah,
I think there's something to be said for kind of playing one off the other and seeing that they're both kind of happening at the same time.
yeah.
What about the good delivery standard? This applies to all of our products that we have at Guildhall. LBMA's hallmark for gold bars used for the gold mark benchmark. If if gold is refined, delivered, and priced outside London, that label starts to lose meaning.
Mm,
That's
I
very
don't know about that.
interesting. I think you would need a solid replacement, and you would need something like competing bodies, right? So where like Pamp Swiss is a member of LBMA on the good delivery list of LBMA and of this other governing body as well, right? You would need to have parallel running ones
Yeah,
'cause you can't just but to be fair, as great as all of those companies are, the LBMA did get political, right? They took Russian bars, which were for good delivery, on the good delivery list. They removed them.
it kicked them off.
They kicked them off.
Sanctioned.
You could still have those gold bars in your vault and they'd be fine. You just couldn't take delivery of them anymore. They were no longer on the list, right?
Yeah.
So to say that the LBMA has not been politicized, I think you have to be fair there and say that it is, and perhaps all institutions are to a certain point.
Hmm.
But that's what we have for now.
Yeah.
Um,
The LBMA is certainly losing its relevancy with first of all with regards to pricing and becoming politicized. Also added a lot of resistance against the LBMA, obviously, because you could be kicked off the list as well,
yeah.
tomorrow. But I think their standards complete could be this LBMA standard could be standardized globally. We're seeing this happen with the help of the BRICS to become a little bit more global. We see the BRICS set up, it's multipolar, multinational, multi currency. Leveling the playing fields is what the whole thing is aimed at, which is why it's so exciting to follow this, because he who has the gold makes the rules, and everyone has the gold. So everyone has a slice and has some input into how the standards are going to be. I don't think much will change. We want 99.99%, three nines, four nines, the
Well,
same standards to apply for the closed loop chain of integrity. And who knows, with the implementation of gold becoming on the blockchain and backing the treasury, these are all topics I think they're running parallel with each other.
yeah, I mean, it's going on t talking about exactly that here because he's saying the US could create its own standard. China already has it with the Shanghai Gold Exchange rules. Other exchanges might follow. We were just talking about that with other BRICS exchanges. And the result could be that gold delivery becomes just a London brand, not necessarily a global requirement. Look,
Mm-hmm.
my only pushback on that is I've seen stories and I understand that, not every company should be on a good delivery bar list. They need to
Yeah,
meet certain requirements
there are
and
huge
what
requirements.
governing body is going to create those requirements and what is the one governing body that everybody's going to follow. You, are you going to have is it going to be country to country has its own rules? It becomes pretty messy. So again, I think you need something, a standard that the globe can follow.
Yeah.
And look, that ain't that ain't fixing London right now.
No, certainly
Um,
it's not.
if the physical trade breaks from the LBMA infrastructure, its certification, pricing, and prestige go with it. We're entering into a multipolar gold market. Man, it's like this guy is listening to Jerry all week. Maybe he's your client or something. Uh,
Maybe.
and the LBMA seal no longer rules them all. Okay, fair enough.
Fair
The
enough.
gold game is on. Uh, so yeah,
Different chocolate bar wrapper. Same chocolate underneath, it's just different wrapper.
Yeah, I liked what this guy said. He said this is a surgical strike on the plumbing of the global gold market, and it's going to ripple through collateral chains, funding costs, shadow banking leverage, and in ways that the public won't see until liquidity fractures.
Yeah,
Wow. I mean, he goes on here. Um, well, we posted this. Yeah, it's pretty interesting stuff. It's very interesting what's going on. And I don't see a way that this is bad for gold pricing. Do you?
absolutely not. This is only positive. It's freeing the market from the derivatives. This is purifying it. This is like alchemy again all over. You're making gold even pure. You're purifying the dirty gold market. The gold is pure. It's just the market, the mechanisms when man's greedy hands gets all over it, you corrupt it to the point where it breaks, just like a fiat currency. There's too much of it, and it has to fix itself. So we are excited. We are watching this play out real time as we're waiting for President Trump. He will soon release this executive order tonight, August 8th. You want to stay tuned to these reels, these get real reels. You want to get real money in your portfolio with your boys here at Guildhall Wealth and watch what this executive order is about. Are they going to be the kilo bars? And will they be implemented in the 100-ounce bars? Or did they strike a deal with Switzerland and decided to move those Swiss refineries, the Swiss melters, into the United States of America?
Jerry, before we run,
Yeah.
what I was talking with someone today about the reset, and we've talked a lot about the reset being a process, but could you see something where the market moves really, really quickly in terms of that?
This is
Like,
systemic risk. Yeah, this is what
like
Vince Lancy wrote. UBS strategist Joni Tebes. The market is very nervous because if you cannot deliver on the quadrillions in derivatives, we're talking about gold and silver markets have a lot of derivatives. And if they fail, This can be the systemic thing that can cause the market to seize immediately. They're talking about liquidity, and that's what brings upon brings up recessions, depressions. When there's no liquidity, things seize quickly, and the market will need a solution, which is why those two bills, the U.S. with President Trump, he tabled the two bills before the Federal Reserve was ever made. You had HR
What do you mean before
25.
it was made?
Yeah, there was no income tax,
Oh,
but they were operating on tariffs. So there's HR 25. There's a bill
right.
to repeal the income tax that's sitting there. But even more importantly, it's HR, the Gold Standard Restoration Act. So if there's a systemic crisis, a risk, they can bring up this bill, rush it through, pass it into law, executive order, gold standard, and this is the reset. And will it be on the SWIFT system that fails? Probably not. I think Besant and team, they've done enough investigations to realize that it could potentially be on the blockchain to be your new stable coin, but it's a treasury stable coin with the help of the direction from Judy Shelton and company. This is the perfect plan. And I think that would be the scenario, the only solution that will fix the problem of these toxic derivatives that are sloshing around globally that needs to be rectified, fixed, cleansed, and we got to move forward.
Well, speaking on that, very quick, did you see, where is it?
Do you see what I see?
Here. Yeah, Mark Carney making more comments. Uh, this gentleman here is Stephen Moran. He's Donald Trump's pick for the key Federal Reserve role. He was the chairman of the White House's Council of Economic Advisors to the Federal Reserve Board of Governors.
Yep,
He
I
would
saw that.
temporarily leave the seat vacant by Biden appointee Adriana Kugler, who is stepping down on Friday. And if confirmed by the Senate, he would serve until January 31st, 2026, and is likely to raise concerns over political influence of the Fed and their long prized independence. By the way, I'm reading that from MSN. I always love that they say they're independent, yet they bamboozled the entire American public by calling themselves federal. That irony never gets lost on me.
Mhm.
The appointment marks Trump's first opportunity in his second term to exert more political control, I guess, or
Yeah.
direct control. But yeah, this is one of his economic advisors, and if anything that we've been tracking, how they feel about gold, they seem to all underlying feel, they've made their thoughts sort of known in a not outwardly way that they
Mhm.
are pro gold. So,
Yeah.
right.
Overt yet
Besson's made
covert at the same
comments about
time.
being a gold bug, etc.
Oh yeah. And I think the same thing with Christopher Waller. I think he was also one of the picks that's getting closer to the nomination for the replacement of Jay Powell to replace
Also,
him as the Fed chair. But there's two other secret nominee potentials. We
okay.
don't know who they are. So this is such an exciting thing to follow.
So the one thing that Jim Rickards posted about this, we put on our X, is that Maran wanted and called for low rates and a cheaper dollar.
Yep.
Low rates and a cheaper dollar are very good for gold and ultimately silver as well. So let's leave it at that. Everyone, enjoy your weekend. Thanks for joining us. We'll speak to you soon.
Cheers.